Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's take a moment to quickly recap the major events of the week just gone. In the past few sessions, we've seen a number of economic announcements from the US that came in stronger than expected, such as CPI and retail sales, just to name a few. And with that, we saw a rally in the US dollar, a rebounding of the US dollar, and we also saw an upward move in US government bond yields. And the upward move in yields reflects the view from the bond markets that traders are bracing themselves for more large interest rate hikes from the Federal Reserve. And this ties in with the week ahead because on Wednesday coming up, we have the Federal Reserve's interest rate decision, and the financial markets are already pricing in a very high probability of yet another 75 basis points rate hike from the Federal Reserve. And how has this played out in the markets? Well, we've seen a sharp move to the downside in gold. The firmer US dollar and the rise in yields has put pressure on gold. In fact, we've recently seen gold drop to a level last seen in April 2020, which really highlights how bearish the recent downward move in gold has been. Looking at the MACD indicator, we can see that momentum is in negative territory, implying the bears are in control. While gold continues to hold below these three simple moving averages, it's likely the recent downward trend will continue. A move lower from here could see a target 1650, and a break below that could see a target 1640. Looking at the RSI, we can see it's moving lower. In fact, it's moved into oversold territory. This could be an early warning sign that the recent downward move in price has become overstretched. If you do see a snapback in gold from here, resistance might be encountered at 1680, and a break beyond that could see a target 1690. Also out next week, sticking with the theme of central banks, on Thursday, the Bank of England will announce their interest rate decision. And keep in mind, the decision was originally planned for this week, but it was postponed by 1 week. Taking a look at the price action of pound dollar, I mentioned a moment ago we've seen a rise in the US dollar in the past few sessions, and that's translated into a downward move in GBPUSD. Looking at the MACD indicator, we can see that momentum is in negative territory, indicating that bears are in control. While the currency pair continues to hold below these three simple moving averages, it's likely the recent downward trend will continue. A move lower from here could see it retest one spot 1404, and a break below that could see it back down towards 113. Looking at the RSI, we can see it's moving lower. If it continues to move lower from here, it might move into oversold territory. Should that be the case, that could be an early warning sign that the recent downward move in price has become overstretched. If you do see a snapback in GBPUSD from here, resistance might be encountered at this simple moving average here, which comes to play at one spot 1519, and a break beyond that could see a target at one spot 1588. So just to recap, on Wednesday and the week ahead, we have an interest rate decision from the Federal Reserve, and on Thursday we have an interest rate decision from the Bank of England. And traders are bracing themselves for more large interest rate hikes as central banks are determined to try and bring down inflation. That's all from me from this video. Thank you very much.